Okay, welcome everyone back to the second part of this recording. Okay, so the last bit we still need to do is they've asked us in the required is to also calculate the sales account and the cost of sales account. So we have completed the journals that we were required to do and did the subtotals. Sorry, let me just see what did I do here now. I'm just going to quickly share again. Okay, so they asked us to still do the sales account and the cost of sales account. Now, the other information that we've already disclosed so far is we've completed the debtors journal, the debtors allowance journal, as well as the cash book receipts. But while we were going through the transactions, you noted there were a few where we had write-offs, which went to the general journal. And drawings that went to the general journal. So what we will do is we will first transfer the totals and the opening balances to these general ledger accounts, and then we'll go back to those items that are on the general journal and go see which of those will affect these two accounts. Okay, so I'm going to share the Excel file first. Okay, so when they gave us the information in the required, they told you the opening balance of the sales account had an opening balance of 242,340. Okay, now remember sales account has a credit balance. So that opening balance information will be disclosed as a credit. So what we will do is we will credit the sales account with the opening balance. And then they also told us that the cost of sales had an opening balance of 152,000. Now, cost of sales is an expense, so that would be a debit. You just get my account headings back. So that would mean we have a debit opening balance for the cost of sales, and you would have received the mark for each of those items. Okay, then the next step is to take these totals of the journals that we have here at the top. So let's start with the first one. We've got debtors journal. Now, if we look at the columns there, we can see we've got a sales and a cost of sales column, which affect both of the general ledger accounts. Now, we said in this scenario, we would debit, credit debtors control, we would credit output VAT, we would credit sales, and we would credit cost of sales. Okay, now we would debit cost of sales and credit inventory. Okay, so that is how we would deal with that. So let's start with the first one. So the cost of sales would be on the credit side of the sales account for 111,461 Rand. Okay, so let's make this a yellow. So then on the sales account, on the credit side, we will transfer that total from our debtors journal. So what is very important to note is we've got debtors control, goes to our sales account. Your folio number is the DJ. Now in this case, because they didn't give us a number, it's just DJ. And then you take the amount. Now, it's very important that you write the DJ in there because you sometimes get marks for this. So the mark is allocated for the debtors control as well as having the correct folio number. Then the second part is we said, okay, the cost of sales column is also affected here. So let's make that a blue. So we said we are going to debit cost of sales and we're going to credit inventory. Okay, so let's go to cost of sales. So we said we debiting cost of sales with the 92,000. But the contra account is the inventory account that we are taking it to. So that's why we've got inventory in here. Okay. So trading inventory, and then we've got the 92,000. For these ones, we do not say and VAT because the fact that the debtors control the trading inventory is the VAT inclusive amount. But if you do the trading inventory or the debtors control accounts, you will say sales and VAT because of the fact that that amount is split up into two components. Then if we move on to the second journal, which is our debtors allowance journal, you'll see the one is a sales return and the other one is cost of sales. Now, sales return, we eventually take to the sales accounts once we close it off. So here we would credit debtors control, we would debit input VAT, we would debit sales returns, and we would credit cost of sales and debit inventory. Okay, so these sales returns amount will also be included in our sales account at the end of the day. So when we do the close out, we will include it in here. Just see. Okay, so I see they did not account for it in there because of the fact that they say it's not year-end procedures. So for your purposes, because the account name is different, we will not take it to the sales account in this scenario. Only when we do the year-end procedures and close off the sales return to the sales account will we actually show it in that account. Then our cost of sales is the 226. We are going to credit cost of sales with the 226. 2,667 Rand will be credited to the cost of sales. Okay, let's see what other information do we still have. Okay, then in our cash book receipts, we've got our sales here. So let's make that a yellow again. And we also got our cost of sales, similar to the other one. So we said we will debit the bank, we will credit debtors control, we will credit output VAT, we will credit sales, and we will debit cost of sales and credit inventory. Okay, so that means in our sales, we will credit it with bank instead of debtors control as the previous one, and it will be cash book receipts. And then our cost of sales, we will debit the cost of sales with bank or trading inventory. Okay, sorry, it's trading inventory from our bank account. Okay, but I've also said there were a transaction that we need to account for where we had to write off. So in the additional information, okay, let's quickly go through. I'm just going to share the additional information. Okay, let's quickly go through the general journal and see if that would affect anything. Okay, so the first one was the general journal for drawings. Now, if we think about what that would impact, you would debit drawings, we would credit output VAT, and we would credit inventory. Okay, so based on that journal entry, we can see that the drawings would not have affected our sales or cost of sales entry. If we then look at the write-off, we would have said, okay, fine, we are going to credit debtors control with outstanding amount. We are going to debit credit losses, and we are going to debit input VAT that we can claim. Okay, so based on that transaction as well, we can see it won't affect our sales or cost of sales at all. But let's quickly see if there's any other information we still need to take into consideration. Here they talk about settlement discounts amounting to 2,870, including VAT, have been granted to debtors. Now, settlement discounts will reduce our sales value, but we need to show the amount excluding VAT when we do the calculation. Okay, in our sales account. So this 2,870 will reduce our sales account. So I'm just going to share the Excel again. Okay, so because we know we've got settlement discounts and it will reduce the sales amount, you will then capture that sales transaction. So you take the 2,870, you multiply it with 100 over 115 to get the VAT exclusive amount. And then the last thing we still have to do is they asked you to balance your sales account. Now we can see that credit side is clearly bigger than the debit side. So what we will do is we add up the credit side, get to an amount of 578,149. We transfer that total to the debit side, and then we balance it by deducting the 2,496 from the 578,149 to give us a balance of 575,653 on the 31st of March. And then the last thing you have to do is you transfer that balance and bring it over or balance brought down for the next period, and that amount here and there should be exactly the same. Okay, and that is how you would balance the sales account, and the cost of sales account we did not have to balance at all. Okay, do you guys have any questions on the general ledger accounts and how we completed it? Or do you have any other questions on the question itself? Okay, if you don't have